Ladies and gentlemen, K-Kim here. Welcome to the market update. Hope you guys having a good weekend this weekend. Today's Saturday, midday. In this video, in this presentation, this weekend video, we'll look at things a little bit more comprehensive, right? We'll be looking at S&P, NASDAQ, Dow, Russell, and the banks. We'll look at the Vixx, we'll look at gold. As usual, we will end the video with the Bitcoin there. So obviously, you know, these weekend videos will go a little longer. I'll do a kind of a complete recap, long-term analysis and forecast. And so I think at this point, you know, as the market is breaking out to the upside, printing new all-time highs, it seems though we've been doing that every day this week. I think a lot of questions out there, especially on social media and things like that. You know, I hear a lot of things saying it's not sustainable. Market is extremely extended, especially the valuations of those large tech stocks. And so there are a lot of concerning voices, and we're trying to figure out where this market is going to end up towards the end of this year. So we got, you know, we only have the month of December trading left. So we got what, 1, 2, 3, about 15 days, 16, 17, about 18 days trading sessions left for the month of December for the year 2020. So we're going to try to figure out what we can expect going into remainder of this year, and it is all coming up right now. All right, so let's follow up on the 65-minute chart first. We've been talking about on the daily update videos this week, and then I'll come back to this daily chart right here that you're seeing on your screen, and we'll talk about the long-term implication of this market, the health of the trend, and things like that, and forecasting what we can expect this month here. So let's look at the hourly chart first and follow up from what we've been talking about this week here. So we've been talking a lot about that rising pivot, right? That rising pivot has been the star. Just kind of, you know, going back, you know, we started tracking that rising pivot since early November, right? Ever since we started to see some volatilities here. And we've been talking about how we want to continue to give benefit of the doubt to the buyers as long as we have my midterm moving average rising higher and my rising pivot is acting as support, because it seems like every time when the price come back down to retest that pivot, it seems to find buyers and the price gets back up. And it has pretty strong resume and has done that every time here, right? Pretty much all throughout November. And that's what that was, right? All throughout November, that rising pivot truly made sure, you know, the price doesn't go any lower, right? How can you ignore technical analysis, technical levels, when you know that entire November this market was relied upon this rising pivot? How are you going to know, right? If you're not looking at these levels, if you're not understanding what's going on, looking at that this rising pivot has been working, serving as strong support for this market. And this was November here, right? And this was what, like 347, and then it was 354, and now 370, right? And then that happened, right? And then we saw a big gap up here, and we saw a little bit of fluctuation yet again. And then what we've been talking about the last couple of weeks, or this past week, that rising pivot, correct? Here, 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 here. We saw a little bit of a fluctuation on Thursday night, right? We saw that last hour volatility. That's where we saw that kind of a long high wave spinning top candle there. But we talked about how we want to continue to give benefit of the doubt to the buyers. Why? We got the rising pivot once again. Once again, this level seems to be holding, because it is no coincidence when there was the last hour decline, we did see that dip buyers coming in, propped up this market back up, closed the day above my short-term moving average. And then what happened on Friday morning? Well, Friday morning, what happened was we did see a slight gap up. We ramped higher on the first hour. That's a second hour. We continued on the second hour on Friday. That's a third hour. So third, fourth, fifth. We did a little bit of flagging here, right? Textbook bull flagging pattern right there. And we pushed through on the last hour. And we got now micro-term rising pivot. So the entire time since the early November, the star of the show has been that rising pivot. Rising pivot in November, rising pivot in late November, until the early December, rising pivot in the last couple of days. So, and you can see that my short-term moving, and you can see ever since we saw this gap up, right? This happened in late December, December 30th, it looks like. Actually, December 1st, right? We saw nice, sizable gap up on the first day of trading in the month of December. And then we moved higher initially. We pulled back to where? Because what happened was my short-term moving average was declining. And then December 1st, we gapped up. So price got back above my short-term moving average, right? And then ever since then, we did see these fluctuations along the way, because market does not go straight up. It's going to have its ups and downs. As my short-term moving average continue to act as support, what happens? The price moves higher with it. And as of today, my short-term moving average is there. So we want to continue to give benefit of the doubt to the buyers in the micro term and the short term. Micro term, obviously, we got the rising pivot. We got a little bit of that bull flagging breakaway to the upside. That's a micro term. In the short term, my short-term moving average been acting as support 3 occasions there, as you can see. So short-term benefit of the doubt goes to buyers as well. Looking at the mid-term, obviously it's been bullish ever since price gone back above my mid-term moving average. It started to rise. We saw retest back in November 23rd, coinciding with this gap area that never got filled, right? None of these gaps got filled, and you think this market is going to come back down to fill all those gaps. Well, we got gap all the way from 220s and 230s and 250s. And so keep that in mind. And, people usually who thinks that gap's supposed to be filled, and then they usually get trapped, because what happens is, even just looking at this price section here, if you really thought that gaps were supposed to be filled, well, we went short here because you thought this gap's supposed to be filled. That never got filled. You went short there because you thought this gap's supposed to fill. That never got filled. You went short there thinking that this gap is going to get filled. Never got filled. You went short here, or closed out your positions, longs or whatever, thinking that this gap was going to get filled. That gap never got filled. Same story here, same story here, same story here, same story here. So, and those unfilled gaps tells us that there's strength in this move. So we want to continue to give benefit of the doubt to the buyers in all terms as of today. Micro term, short term, mid term, and the long term. Let's check out that oscillator before we go back to the daily chart. So looking at the oscillator, so we can see we saw a little bit of sideways action. That's what you call correcting through time, right? Right here, instead of correcting through price. But instead of, usually what you would like to see is maybe, the oscillator is correcting, resetting while the price moves sideways. This time, price and the oscillator, they both decided we're going to move sideways. And then you can see bulls push that all the way. That's a good sign. because you see the strength in the buyers. You see how the buyers bring it up every single time. They bring it all the way up. They push as much as they can. But bears have not done the same. We see the downturn, they're not bringing it down. They're not bringing it down. They're not bringing it down. We're seeing this premature bounces. What does that mean? It means bears are weak, bulls are strong. So when the bulls got their energy, they go all the way back up. They go all the way back up. They go all the way back up. So let's check that out. So when the price gets kind of extended in the short to micro term, it seems that there might be some volatility going forward. But again, that's how this market moves anyway. That's given. It's nothing special about that, because the market goes up, market moves a little bit of volatility, market pulls back a little bit, gathers momentum, and then buyer pushes back. That's what happens in an uptrend, because we are in a uptrend. So because of my oscillators telling me that buyers are getting tired, so either we see, here's the thing, what you have to understand, just because we're seeing the oscillator at its overbought zone does not mean that the price cannot move higher. What bulls can do, they might not have enough juice to keep marching higher in their trading hours, but what they can do is gap it up overnight in pre-market. So what usually could happen is, in this scenario, and this will be the best case, let's say this thing gaps up, I don't know, 370 or something like that. Maybe 372 or something, right? That's not a big gap up, right? It's what? 0.6% gap up, totally doable. Let's say we see a 0.6% gap up. Let's say we see a 0.6% gap up on Monday morning, right? And then what happens is my oscillator is going to kind of stay the same on that gap up or move a little higher. And then we see a gap. And what could happen is this thing kind of pushes a little bit, pulls back. Because what is going to happen is there's gap here. And then, and then what happens, just because buyers are tired hitting that overbought zone, you're going to want to see this oscillator resetting back. And in that process, we could see this thing maybe coming down, filling the gap, or kind of hang around until we see that oscillator resetting. You see what I mean? Like, kind of similar to this, we see a gap, but we kind of move sideways here, and then you see that oscillator kind of reset, and then it pushes it back up again. Something similar like that. So we want to continue to give benefit of the doubt to the buyers going into Monday, but to know that we're getting into the overbought zone. And so if the buyer's going to just march it without the gap ups, it might have some tougher time just because where buyers are starting to get tired. Does that make sense? Let's go to daily chart here. So, and now we're looking at things much longer term here, because what we're looking at in that 65-minute chart was just looking at, here, let me see. Yeah, so we're just looking at we're just looking at this price section here. If I go to daily chart, what we're looking at was just this. That's what we're looking at, and that's what we're analyzing. But as we zoom out, looking at the daily chart, what do we see? We see a big picture, right? So when I say long term, this is what I'm referring to. I'm referring to this chart right here when I say long term. Because now we're looking at things long term. What have we been tracking in the last, I don't know, several months since September and August? It's this pivot, right? This is a pivot that we've been talking about, because you can see it was a resistance there, another resistance there, another resistance there back in early September, right? But I've been mentioning, we've been discussing and talking about the fact that this resistance here, the more times it hits that resistance in a uptrend, it has higher probability of breaking out, cracking that resistance to the upside and breaking out. You guys remember that? So you see there's a 20% decline here back in late December of 2018, and there's that COVID massacre in March. Something changed in September. Instead of saying this is 25%, this is 35%, this is measly, I think 8 or 10%, definitely there's a strength there, right? Price understood that there was the resistance. There was a little bit of fear. There was a little bit of uncertainty right on that level. It is not a coincidence. It was some kind of a chance that we started pulling back there, right? It is that level that the market is going to face some resistance. We've been talking about that. We pulled back about 10%. I think it was 10%. I'm pretty sure it was 10%. Yeah, 10%. So it was 10% pullback, which is much shallower than these guys, right? And once we saw a bounce from that, came back down, did a little bit of W. That was a little double bottom there, and then that's a neckline. We hit that neckline, and we held that neckline, but we see a gap up right here, just right on that. That was, I think, the post-election or that weekend after the election week, right? Biden, there's news that came out that Biden was the projected winner. When that happened on Saturday, on Monday morning, we saw a big, like 3% gap up right onto that rising pivot, right? It's now pivot because we broke above it. It was before rising resistance, right? Pivot means it was a resistance before, now it's potentially a support. That's what it means. That's how I define it when I say pivot. So now it became a rising pivot because we're breaking out of it now. But it was a rising resistance at the time right here. We hit that once again, pull back, came down to retest that double bottom neckline, held that for a while, finally broke above it. I mean, just think about this. This is a resistance. This is a neckline. This is double bottom. Right? This market has been on point on these technical level. There's no way you're going to able to learn how to navigate this market without understanding these things. Right? No way. So sometimes people ask me, well, why is that, when this resistance gets hit more times like this, why does it have a higher probability of breaking out? Well, because it's an uptrend. It's higher, essentially that's higher highs. Higher highs means there's buyers, there's more buying pressure. Looking at things long term, there is buying pressure. So when the buyers come, bring up the price, it has more pressure, right? It has more power to cultivate that higher high. And more times it cultivates a higher high, the more times it's likely, right, continue to print that price and establish an uptrend. But if we're in a downtrend, let's say, right? I mentioned this before, I don't know, a week ago, 2 weeks ago, 3 weeks ago, I'm not sure, when I was talking about this. Let's say this is downtrend, lower highs, right? And then this thing goes up, hitting this resistance several times or a couple times. If that happens in downtrend with lower highs, higher probability it's not going to crack this thing going down heavily. Because we're on a downtrend. Do you understand? All right? Because we're on an uptrend, because the resistance is rising, and market definitely took a note of this level, that this is resistance, but no longer that level's a threat. It took its time right there. And that's how bulls operate. It don't just boom break out. It gets to that level, it checks it, let everybody know that we get it, I know it's there, it pulls back, right? And bulls strategize again a couple times, and finally, slowly breaks out. We talked about the characteristics of a bull market and a bear market, how bulls like to move, how bulls like to move, how bears like to move, right? Bulls like to move slow and steady manner. That's how bulls move. Bears, they're not patient. They want to bring things down fast. Very, very impatient. They want to see a massacre and blood with long, bloody candles. But bulls don't like to operate in that way. Bulls like to inch higher, and there's that trap. Most traders, investors think you make more money faster because of that notion. But what most people don't realize is when bulls move slowly like this, they actually misunderstand as a weakness. It's actually a strength. It's actually a strength. And you will see another decline. But as long as this market cultivates higher highs, that means if market pulls back, it is pulling back to cultivate what? Higher low. Let me give you an example. Those are lows. Those are all the lows. And these are all the highs. What does that mean? It means that's how uptrend is developed, right? And every pullback since April, many bears thought that was the top. That was going to be the start of a rug pull. That was the start of a second wave, another massacre, going back to the March lows, start of the Great Depression, whatever people are saying. Everyone flat out wrong because you completely disputed the fact that this market has been, cultivating higher lows and higher highs, that they were in an uptrend. And we're continuing in that. What is this? What is this right here? That's a higher high. Isn't that? So I think this is what I propose. I think the best case scenario for this market this year, this best case scenario will be 400. And if we do see some kind of Santa rally, December tends to be a good year. Historically speaking and statistically speaking, right? Statistical probability suggests that we're going to have a good month this month. And so and also because of the fact that we just broken above that rising pivot / rising resistance, we saw that, 10% decline, 8% decline, and that's a decent size corrections twice with a little double bottom. That's a little nice consolidation there. We saw that happening October and November, and now market seems to want to resume with this primary turn uptrend. So if I do a little recap right here, just looking at last 7-8 months, you can see that's a base, and that's a base, and that's a base, and that's a base. And in between, you see those runs, you see these runs, you see that run, and I'm expecting that run also with the fluctuations along the way in the short term. So what I propose is, I think, we might hit 400. Worst at the best case scenario this year. If not, let me do a little bit of Fibonacci here. You know what I'm going to do with my Fib? I'll use that peak, this, September peak, and to the June lows, right? Because it seems to be that was that wave of that move, and then we saw a pullback. And guess what? That pullback did come down to, if I go like this, you can see it never breached below my Fibonacci level, right? Do you see this? So that's where we found support. And that tells us that definitely, the market is aware of this level, not to mention my long-term moving average acting as support right in that vicinity. And that's kind of where you can really truly see the beauty of technical analysis. You seeing these levels coinciding, colliding together. And when you see that, it's an important level, right? So that's what I did here. I measure from here the June lows, and then the September highs, and then market came down, retest my Fibonacci levels there, first level and the second level. Both level acted as support. Now we're breaking out, and you can see how my extension is telling us, which my 161.8% extension is telling us somewhere here about 397 to be precise, around 400, right? Around 400 is, I think, in the best case scenario, end of December, or I think 382 is also a possibility somewhere here. I think sometime, you know, at some point though, because I mean, market likes to come down, and you know, that's why I called it a pivot. Why did I call it a pivot? Because it was a prior resistance. It likes to become as new support. That's how I define my pivots, right? So it's a rising pivot because that means at some point it wants to become a support because it's been resistant for so long, it transformed, right? So either I think there's a good chance you go to 382, 400, somewhere here, you know, and then market probably wants to retest those couple times before seeing another consolidation. Do you see what I mean? Right? Before, you know, something like that, retest those levels as new support and have a little bit of consolidation, right? There's that consolidation here, there's a consolidation there, there's a consolidation there, right? Because that's how bulls like to make a move, right? And so, and again, I'm going kind of way ahead of myself. Obviously, I can do that analysis for you guys next year. So I think those are the levels that I'm looking forward to this month of December. So 400, the best case scenario. I think 380 very much achievable, and that's only from here where we're at today. That's only 3%. That's only 3% move. And to 400, that's really about 8%. So if market really want to go crazy, sometimes it can do that. Maybe somewhere here, 410 or something like that. But we'll put these levels there, and we'll kind of follow up on that. All right, so let's go to NASDAQ here. Since I spent a lot of time doing detail and comprehensive analysis on the S&P, I'll spend not as much time on the NASDAQ. We'll look at just overall level, and then we'll move on. All right, so we've been tracking this ride. This is what I mean, right? On Spider, I just said that rising resistance, that rising pivot wants to truly become a pivot, because right now it's not a pivot. It's actually still a resistance. It's a half pivot because price broke above it. NASDAQ has already done that, right? So this is kind of like what I mean. Like you can see right here. So basically where the Spider is at right now, if maybe Spider is following its big brother's footstep, Spider's in like somewhere here. That's where Spider is. So you see a big move. Maybe that's some kind of Santa rally for this December, and it likes to come back. And something like this this is what S&P could look like, right? Sometime next year. This right here. And obviously, if you have this kind of roadmap, if Spider sees these kind of points, what are you going to do? Are you going to start calling the top there? Are you going to start be like, oh my God, that's the mother of all, trap. This thing is going to crash, right? I mean, I've been hearing this since, 2014. Don't do that. I would be buying those dips. As to I did buy these dips on the NASDAQ. But anyway, because that rising pivot, right? That rising pivot right there. This is a true rising pivot. Why? It was resistance, and it became support. And now we're making new all-time highs. That little double bottom neckline right here, we finally broke above it, cultivated new highs here. That's higher high. This gap definitely acted as strong support there. Right? And that's where kind of that bullish run spirit came about and finally made that run above my short-term moving average. Look at my mid-term moving average, man, acting as support. Impressive resume there. Everything is bullish at this point. All of my short-term, mid-term, long-term moving average moving higher. Let's go Dow Jones Industrial Average. You know these numbers. You see these year-to-date numbers, right? Man, the numbers were horrendous. The bottom three, the Dow, the Russell, and the banks. You looked at S&P, you looked at NASDAQ. Look at S&P's 14% year-to-date, 43% year-to-date on the NASDAQ. We're talking 80, 90% on the NASDAQ since the March low. Some crazy numbers, right? And I remember while this S&P NASDAQ was rushing to the upside, Dow, Russell, and the banks were heavily lagging. Heavily. Now look at these numbers here. Dow was positive, right? 5% year to date. They were negative 20s and 10s. Same with the Russell 2000. 2000 was just bad, right? Now 11% year to date, actually passed Dow. Now getting close to the S&P, and this all happened on the Russell just recently. We should want to talk about that. Look at banks. Man, negative 25, negative 27 at one point is only down 7% year to date, catching up really, really good, while the NASDAQ is kind of cooling off. Anyway, so Dow obviously made new all-time highs. What does that mean? It is subtle, yet we're continuing to cultivate higher highs there, right? It had a very steep decline, right? And we've recovered from it, right? Dow actually did have a little bit of a trap here, if you want to call anything a trap. That's a trap right there. You know, so if you are too much focused on the short term rather than understanding the long term, you would have looked at this as a lower low. You even looked at that as maybe in head and shoulder topping pattern. You thought this was coming 200. Well, that didn't happen there. Now with that little trap, we got the neckline. We held it and continue to march higher. We got this gap, never got filled. And that tells us there's a strength there. This gap never got filled. 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 Let's go to Russell 2000. Here comes the Russell. Look at the Russell moving all of a sudden, right? There's that rising pivot. There's a quick retest. There's a quick retest there. There's a rising pivot. Right? Every single rising pivots I've been analyzing. And I've been actually tweeting out quite a bit at 2K Kim this entire week. I'm talking of individual equities. These companies, stocks, not only indices, stocks. How many stocks are also, respecting the rising pivots, right? And breaking out off of those rising pivots. Everything started with those higher lows here, continuing to cultivate, but things really sped up for the Russell 2000 with that island bottom gap, right? So you can see there's a gap down, there's a gap up, this thing becomes island bottom, boom, straight up, and that performance on that island bottom is 25% just in 1 month. That's some crazy move there. 1 month for the index to move 25%, that's a huge move, right? And all because you and I, we've been analyzing this market. We've been understanding that this market is an uptrend. We've been talking about how we're going to see a great sector rotation where these laggers probably going to catch up, while the NASDAQ cool off. And that's where you see this kind of move there, right? And with that, what is that? Where's S&P now? The Russell 2000. Russell 2000 is at higher high. What does that mean? We're in a primary term uptrend. Primary term uptrend, right? And so, and when the index is like skyrocketing like this, do not dare to call tops or short it. You're gonna bound to lose money. 95% chance you're gonna lose money. Maybe you get lucky, but 95% chance you're gonna lose money. Because market can correct through time or price. And when the market is in this breakout level, it could correct through time and then continue higher. You could see some big gap up, some fluctuation or something like that. Maybe you see a one-day decline but gets right back up, something like this, something like that. And I also talked about how, back in November, right, this candle right here, we saw a big gap up, right? I think that was what? Some crazy gap up. Yeah, almost 10% gap up. 10% gap up on the Russell 2000, right? And I talked about how with that gap up, we put that island because you can see right here, there is that gap down, there's gap up, there's that island. And not to mention, S&P actually completely closed this gap, that gap that was open after the announcement of projected winner as Biden, right? But the Russell didn't. Russell, the gap remains, and this is why it is extremely, extremely important you track gas, please. Do not disregard this subtle information, right? Let me go back. It's important, and we talked about this. Look at right here on the S&P. This is the same gap up from here to here. There's about 3.5% gap up on S&P. Filled. Gap was filled on the S&P. Why is that on the Russell, it was not filled? We did see the pro pullback, but the gap never fully filled. It only filled almost halfway, maybe a little more than half. But the gap was open, not to mention there was that island gap also, right? That's why I put that box in green, similar to here. That told us something. We've analyzed it. There's more strength here on the Russell 2000 versus S&P 500. That's why Russell 2000 did 25% in November. Right? If you're not already long, don't try to chase this. If you're trying to short this to get a couple points, a scalp or whatever, that ain't my game. But that's not how you're gonna truly accumulate wealth or build your portfolio doing that. I'm just letting you guys know, but we have so many opportunities to able to buy these levels, and market always give you a lot of opportunities. And you have to understand that once there is quote unquote confirmation of a move, it's way too late. When everybody can see that's a breakout, you're too late to enter. You must enter prior to the breakout. When it is not attractive to buy, that's what you need to buy. Let's go to banks. And I'm going to reiterate that. Why buy when it's not attractive to buy when we go to Bitcoin? And I'm going to share some of my trades. But let's talk about banks here. Banks had a great move also in November. Let's see here. Yeah, about 25. So banks and the small caps, they both did 25% just in November, right? And that also tells you, do not chase it. Because in November, if we look at the performance of NASDAQ, it's not 25%. Because NASDAQ just been doing nothing. So if you just kept chasing those large tech stocks, well, they weren't moving. So then if you actually got into these laggers, instead of chasing the high flyers, then you had a nice move here in the last month or so. They got the rising pivot right here. But more importantly, what do we have? High, higher high, higher high, low, high. And this is not new. We've been talking about this, right? I've been analyzing this market with you every single day. And this market is at 28.98. I believe it is going up to fill this gap. There's good chance that by end of this month, by end of December, we might fill this gap, unless this thing goes up here near the gap area and start to stall. So that's the thing about the gap area, is the whole area is going to act as resistance. So either it's going to go to the gap area and then starts to fall, or it's going to actually fill the gap and then fall. But sometimes what happens is it gets to near that level and then it gaps it up, turn this into an what? Island bottom reversal and flies. What happened? That's what happened on the Russell 2000. So is the banks following the footstep of the Russell 2000? There was a gap here right there. We marched higher, we gapped that up, boom, right? So the banks, are we doing the same with this guy? I guess we'll find out. Either way, we want to be long, and I think we'll have a good month of December coming, right? All right, so let's go to the Vixx. And I've told you guys this before, Vixx, you should never analyze Vixx to try to time the market. Vixx should always be a supplement, right? It's subordinate to your main analysis on the indices. Never look at Vixx and then try to time the market correction. It's not going to work. But again, use it as a supplement. So you can see there's this gap here. It hasn't fully filled. We filled maybe halfway. And we're kind of in that process of filling it. And there's a chance maybe pops a little bit, come back, you know what I'm saying? But I think there's a good chance that this month and next month, probably going to Vixx is going to go out, go down, and fill these gaps. We might have a little like hiccups, like little, you know, these things going on, right? And my short-term moving average is curling down here. We might have a, oh, and then come down, oh, and then come down, something like that. But I think at some point, we're going to fill these gaps there. Let's go to gold. So gold, I put this Fibonacci for you guys, I think last week or 2 weeks ago. Last week I didn't do the video because of the Thanksgiving holiday. We took a rest on this video, but I gave you this Fibonacci level I think 2 weeks ago. Came down to my 50% retracement. We bounced. We still got these short-term lower highs though and lower lows. Obviously in the short term, and long term we're still bullish, right? We got the low, and somewhere we're trying to figure out in the long term if that's a low, that's a COVID low. Is this gonna be that, you know, the long-term higher low? And that's what we're trying to figure out. I think for that to happen, it needs to go up here and start bouncing back up. And we want to see the short-term moving average rising like that. Right now, is tough to say. There is long-term moving average residing right here at 158 on gold. And so you can see that's the last level fit. If this thing does come down to 160, I also think that that's a good level for accumulation long. So it's difficult to say as of today. Is it going to come back down here, or are we going to? Is this going to be a D bottom, right? How I like to approach it is buy here just in case, because if this thing, you know, somewhere in that vicinity, so just in case, if this thing becomes a low, and then you can able to ride it. What you don't want to do is, well, you trying to find the best, perfect bottom, perfect prices. You're waiting for 158. A lot of times market may not give it to you. So that way, if this thing starts to go higher from here, you're part of it. If this thing actually starts to go up and come back down, then maybe you can add more, and then you can play it that way. Let's go to Bitcoin. So Bitcoin had some big moves here. So you can see there's a pivot. Again, even pivots working on the Bitcoin here, much more fast paced. I mean, so Bitcoin is definitely retesting that pivots here, right? Turbocharged kind of way, right? That's a resistance. And you guys remember what I said on, when I was analyzing S&P, right? That resistance loves to become a pivot. And for it to become a pivot, it needs to retest that, right? And came down so fast. Came down so quickly here. And you can see how quickly retested just one day. That's it. And just got right back up, right? I mean, that's some turbocharged, super fast pullback and just big back to highs move there. So here, I want to share with you, and you guys know, if you've been following watching these weekend videos every day since, because I've been analyzing Bitcoin with you guys, I think since like April or something, or May or something like that. And you guys know that I went long here, and I exited here, partial positions, and I bought more here, right? But you know how internet is. You know how these people on social media, they say things like this all the time after the fact, right? They tell you they bought it here, right? That's what they always say, and they just tell you guys these things. They always find the perfect low or something like that. Well, I want to make sure I don't want to be that person, so I brought my work to you know, as a proof of my my trades there. So as you can see here, this is when Bitcoin was, this is grayscale, was trading around, you know, in this vicinity here. So about 10 and 11s there, right? So this was right here. That chart you're seeing is right there. So, and you guys know, if you've been buying, you know, watching my video, you know that I told you I bought it here, I bought it here, and I bought it there, right? But just so, if you're just watching this, so you can see that I was buying here, right? And that's 10 and 11s there. And then there's another one. So now you can see this is a little later. I think this was October 8th. So I bought it here, my first purchase was here on Bitcoin, and then I bought actually this dip, this fast decline, and then I actually bought again on this gap up. So it was all in that 10 and 11 area. Do you see it? 10 and 11 area, right? Keep in mind this, you know what I mean? This chart was screened on October 8th. So you can see where it tells you how much the Bitcoin price is on this time when I screened it. And this, all of that is right here, right? This was this move, this move, right? You can see there, that long lower wick. I actually bought it when this thing came down, and then on that gap up, I bought it, so it's all here. And then I held it, and as you guys know that I'm not a day trader, I'm not a swing trader, I'm more of a position trader. I like to hold things and I like to ride the full wave. And you know, and this is kind of what I mean is I like to get in before the breakout. And that's kind of my biggest thing. I never like to, you know, I never like to chase the move. And you can't never wait for a confirmation, because once you know that breakout is actually occurring, right, then it's too late. And as you can see here on my first entry right here, this thing initially made a move from 1170 to like 1475, right? How much move was that? Yeah, this move. So this move was like what? Like 25% move. It's not a big move, but that's a move. And as you can see, I held it. I didn't close out any of my positions. And when it pulled back, I added more, right? And then what happened? And then it initially made beta bounce, came back down. I added more. So I'm positioning myself in Bitcoin. I'm positioning myself in both Bitcoin in the price, you know, around 10s and 11s, somewhere in that vicinity. And my goal was to ride this on a breakout, and I want to get in before it becomes too popular. And so this is how I close it out. So you can see I close out my 1/3 of my positions here at like 22 or something like that, right? And then so I had a 70% remaining, and then at 23.75, right, I closed another third, but it's, the math is done a little bit differently. It's not third and third, and I got third left. It was third, so I have 70% left, and from the 70%, I closed third. So means actually half, now I close out 50% of my positions. That's actually how it works. So from the whatever was remaining after this third, right? Remainder from it, I closed third from the remainder, not third. Do you understand what I'm saying? Right. So that I'm now holding half. So basically I made more than 100% gain. So I closed half with the 100% or more gain, and now I'm holding the remainder. And then what happened was it tanked. Right, so that was there, and then it came down. So you can see there was a red. It actually ended the day red, but I actually closed out when it was green. Right there. Why? Why did I do that? You see that blue box? What is that? That's gap. And you know I love to track gaps. And you know that this gap area is going to act as support. And some say, well, why didn't you wait until the gap get filled? Well, to be honest with you, I'm already at 24. I mean, that's just what, like $2 more? I mean, I don't want to be too greedy here. And plus, after this kind of straight up move, hitting that near the gap area, I think is enough to see resistance there. So I didn't want to become a pig here. I thought, you know what, if it goes here, that's fine. But I think that that gap area is going to act as resistance, right? And so that's where I closed out. But then you can see here on this chart, it actually started tanking after I closed 1/3. And the next day it tanked. And then the day after, we gapped down pretty hard, and price came back down to about 1735 or so. And there's that rising pivot, and there's that rising pivot, right? And not to mention, you can see my Fibonacci here. I put Fibonacci from here to here. Why? Because that's the low, that's the high. It came back down to where? 50% retracement, which is also coinciding with the prior peak. Not to mention, we got the rising pivots. Added more, and that's where we're at now, 23. And that's what happened. So that's my trades, right? And just I mean, things are just happening so fast here. You know, you didn't have enough time to second guess yourself. You just gotta pull it. You just gotta pull that trigger. So you got that island gap, we got this big gap. I don't know if that gap is going to get filled. So far right now, I'm thinking of holding. I'm not sure. At this point, I'm not quite sure where I want to bring it to. Is it going to be able to come up here? Possibly. It's been such a fast move here. You know, things can get a little bit hectic. I don't know. It's been acting a lot like a penny stock in the last couple of days or couple of weeks. I'm currently holding the positions now, but basically, so I close here and then added more. So I'm holding my positions at this. I haven't closed out anything recently here. So one thing I can say is I want to continue to give benefit of the doubt to the buyers, knowing the fact that we got this higher high here. And it's a big breakout. You know, this whole thing was a big base. And I think with that, that's a big base. That's a multi-year base that we just broke out, right? And that's kind of what I was looking for. You know, I wanted to see this thing breaking out of this multi-year base, right? And again, I wanted to get in before the breakout. So that way, I didn't have to chase it later, and you get better gains if you do this, right? And there's a reason why I wanted to go long here is because I wanted to see that cultivation first. You see how I didn't just try to call bottom. If I just went long here, that's great. If I did and held it, that's great. But a lot of people probably didn't. Let's say I just went long here, but it's a difficult time because, well, we got the lower highs and lower lows. We're still in a downtrend. And I was analyzing this with you guys for a time. And I wanted to first see evidence that this turns into an uptrend first. We got that because we start to receive and cultivate those higher highs and higher lows. And that was important. That was important for me. And I knew this level is a potentially that higher low. And that was the breakout. And with that, actually, let me put that Fibonacci here. Yeah, because that's on point also. Coinciding with that peak. 50% retracement and the rising pivot. How are you gonna know where to buy, where to add if you didn't understand the technical level, right? My technical analysis just told us that that's a mighty important level. We got the fib, two rising pivots, and the resistance prior peak, and this thing just gapped down. Well, because, I mean, a lot of people just kind of get scared. Like, we see a big gap down like this. You're like, I don't know, right? You second guess yourself. You miss your entry. And the next day, we just gapped up. Anyway, there you have it, guys. I hope you guys enjoyed this analysis. And my hope is that this presentations or this presentation, the presentations that I give you every day, and usually these weekend videos, that it will help you in your own analysis, how you approach your game. And you can always tweak things to serve best your trading strategy, your approach, right? And develop the analysis and forecast and entry levels and things like that. That's going to help you in your style of trading. Obviously, I'm telling you what's been working for me, how I've been looking at this market, and you don't have to completely copy me. You just, oh, I understand how Kay is doing, but for me, what I do is I can use that, I can tweak this a little bit, and then I can make it on my own. And so that way you can have your own way of looking at things, and you can use these videos as a supplement to your own analysis. So enjoy your weekend. Good luck trading next week. I'll come back for you guys on Monday.